Hey there, good afternoon traders. This is Trader Tim from over at eminimind.com doing a Monday market analysis video to kick off the week. We've got some earnings coming out this week in Google, I believe Microsoft and Apple. So keep an eye out on those if you're going to be swing trading them or putting on any trades. Just watch out for those earnings. Um, I wanted to start today with the VIX. And when we take a look at the VIX daily chart, we can see the big spike today that kind of takes us back up into the mid 30s, which we were in at the beginning of September. And so in the next couple days, if the VIX goes above, we'll say like about 38.50, which was the high from September 4th, that will be a strong indication that this strength of this uptrend is kind of breaking down. If we roll over and then we just put in a lower high, you can kind of see like a series of, you know, dropping highs here, which take us closer to, just back in that mid 20s, which is where we've been, and a bit of a triangle forming on the VIX. But if we go to the actually we'll go to SPX, we can see the lower high that's been put in, but if we draw from lows to that lower high, today we stopped right at that halfway back long. So in the last couple of videos, I've been talking about a retest of the 50 at 32.76 would not be surprising and wouldn't necessarily be the most bearish thing in the world, but holding this 50% and pushing into highs or making an actual double top is a likely scenario. We do have a lot of strength behind us here. If we look at the gaps, what do we know? Today we closed, or we bounced off of this gap from back on the 6th and took out another one from here on the 7th. So keep those gaps on your chart. If you're on Toss, Thinkorswim, you can just create a new drawing set, and then I just title it gaps, and I put my gaps on there, and then I don't have to write them down. I used to write them down, and then after a while, you kind of forget about them, or you come back to a level and you don't have it on your chart. So you can just toggle through those drawing sets, and then they can keep your main chart, nice and clean. For those that are also, if you're on Toss, for those on Toss, sometimes we get these weekly updates of the platform, and if your background ever changes, I know for me this last one changed to my background settings. If you go to Setup, Application Settings, and if you just want to change the look and feel of your background, you can color scheme, and you can change it there, light, dark. I like the old school Toss just because I've been using that setup for 15 years. So that's where you change your background settings. Let's see here. We've got, as far as economic news this week, decent amount. The usual suspects, house price index tomorrow, as well as consumer confidence. And so we'll be doing a live trading session through those numbers. And if you want to tune in, you can do that over at eminimind.com/VIP. So that'll start right at the NYSE Open and then take us into the morning. So we got a couple of those will be before the bell, but then we get consumer confidence right after the bell. As far as swing positions go, before we get into today's ES trades, my BLFS, oops, B, not V, B as in boy, is still hanging on. Put it on above the high of this hammer here, and then I've got my stop below this bigger body candle. So anytime we have candles that are inside following a bigger candle, I don't bother tightening my stop here. I just leave it underneath. I wouldn't call it a breakout bar, but it's the bar that breaks above the prior candle's high. So you can see the high here is above the prior candle's high. So you can use that as your stop placement, as opposed to leaving it underneath the initial candle's low. Then the other, I got three going, or two now. But I had three. NTES is keep continuing to fall. This one I would just trail each candle's prior high. So like today when we close, if we close lower than the prior candle, then I would put my stop above today's high. Otherwise, it remains above yesterday or Friday's high. And then tap actually tapped me out here on the 22nd. We had earnings coming up, but I was kind of hoping we could roll over a little bit more, but we didn't. We bounced and took me out above the high of the prior day, which was the 21st. So I was just trailing my stop down, down, down. It took a little bit off. I believe it was on the 16th, and then the rest of it on the 22nd. Normally I wouldn't take it all off, but with earnings coming up and not having a lot of distance between the entry and where we were, I just took it all off. It's best, I've found, to milk or ride out those strong winners, and then if you can just scrap the ones that are being a little bit slower or just not materializing as fast. Like if you go to NTES, compared to where its starting point was up around 91, we're already down to 86. That's a little bit bigger spread, and it's moved away from its entry a lot quicker, especially with the gap down. So, the ones that gain momentum and start building speed or gaining speed quickly are the ones you want to kind of stick with and ride out. Let's see here. So on the SPY, we've got kind of this two-leg pullback that you see quite a bit, and it actually, what I would consider it failed that second leg. So what I mean by that is if we look at from the high to the move down over the 4 days, we got a one candle bounce. That's the first leg down. And then we have this next leg down, the couple of inside bars. This candle breaks the candle's low over here. So we've got, this is the second leg, another 1 day bounce. And now we've broken below that candle's low. And so we've broken that two-leg pullback. If we look back here, starting from the high, we move down, and then we get a bounce. Actually, we can even get a little bit more micro. We sell off, we get a one candle bounce, the second leg down, and then we push up, and we'd make a brief break above the swing high here. It was only a couple of points, but it still counts. So then here's the next two-leg pullback, move lower, you get a one, we'll call this a one candle bounce, and then the second leg down, and after that two-leg pullback, we get a break of the swing high and start moving much higher than we did back here. So for us to break, we've got a leg down, one candle bounce, second leg down, one candle bounce, and then for us to take out that swing low, that's pretty bearish in the context of turning around today and pushing back up to make a high above Friday's high. It is a little bit nuanced, I know, so if that was a bit confusing, drop your questions in the comments below and I can try to do a better job explaining if you have questions. But as we sit at this halfway back at the 50% here, looking for us to maybe build a base here and then be able to move higher. If we go to today and the ES, I wanted to touch on this morning that, looking at Friday's low, we were not able, so that's this 34.3150 line that I have here. We were not able to break back into Friday's range. So I've got the same lines drawn on the tick chart on the right. Let me get these centered a little bit. There we go. So what you see over here on the 5-minute is the same data. It's just broken down on the 512 tick chart. And so as we were coming up and kind of at the top of the first 30-minute range, we were pretty close to that 34.31, but we just couldn't get into it, move into yesterday's range. So after a number of tests above the top of the first 30-minute range, we did get that rollover, and that sent us into a kind of the first bigger push down. So if we just run through today's trades, we did have a low tick, kind of. If you ignore the first 5 minutes of data, we did have a low tick at 642, and that kind of that lined up with the low tick or the low price over here at 642. It was a little bit wonky right off the open. If you drew from low to high, you ended up trading through the 6018. But at the start of the day, there was some potential for looking like we could move up into Friday's range. So remember, this is happening, in the first 10 minutes of the day, so we don't have this data that we don't know what ended up happening at the time. And so if we go from low to high of the spanning that first 30 minutes, we pulled back to the 50 and then traded pretty cleanly up to the negative 23. And so my failure point was if we come back into, and so my failure point meaning, okay, things are looking pretty bullish at this point, or at least somewhat bullish. The breadth was not as weak as it is now. And so drawing up the next retracement, that 6018 would be the failure point to switch gears and start looking for shorts. It was a little bit, the distance between the 50 and the distance, between the top and bottom of the first 30-minute range was not huge. It was only 10 points. But for us to sit on top of the first 30-minute range and not be able to break into Friday's range at all, and then come down, I was waiting for us to break the 6018. And the reason being is if we just came to the 50%, we would be holding the uptrend. So choosing not to short here, even though it did line up nicely with the top of the first 30-minute range, kept you in the trade, made it down to a first target, and then completing the negative 23% target. With the long, with the uptrend already intact on the morning, I wanted a little more confirmation. And so waiting for a break of that 6018, which, one tick here, two ticks over here. It was a little bit messy up here. If you were to draw from like high, it's crossing all of these high points to draw up a retracement like that. That's a much messier setup than drawing from a swing high to a swing low where the line connecting the two anchor points, it kind of goes straight through the price. So you see over here, if I draw highs to lows, my anchor point line, this line that's kind of, at a 45-degree angle here, is going through a bunch of prices. As far as like price goes up, price goes down, goes back up, goes back down, and this line is going through all that versus a cleaner setup where we have a high, we have a low, and then the line connecting the two is that trend. It just goes straight through it, nice and clean. So that's the short that I went with, and coincidentally, the Mondays have actually been the days where I've had the best trades here in the last 3 weeks or so. So just shorting 34, 25, 50. And then we didn't really have any major swing highs here. So you could get a little aggressive and trail the extension. And then when that one goes beyond its 61.8, you can trail the next extension and going down. And this one rode pretty strong all the way down. We had a little swing high here. You can return to trailing the regular traditionals, or if you want to take a swing low before that high and trade the extension, it doesn't matter. I just kept it simple and went like that, and then took it out 34.0850. So nice little short. At least the first push down, we went sideways for a while and then continued on, but we'll see if the rest of the week remains the same as the last couple of weeks, whereas Monday caught a nice runner, and then the rest of the week was a little bit blah. But if you want to tune in, like I said, you can do that tomorrow morning on Tuesday, eminymine.com/VIP. So thanks for watching, and I hope everyone has a great week of trading.